You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options. Facebook.com/TheOptionsInsider or via questions at TheOptionsInsider.com.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from theoptionsinsider.com and co-hosts, Uncle Mike Tusaw from RCM Asset Management, Andrew the Rock Lobster Giovinazzi, and Mark the Greasy Meatball Sebastian from OptionPit.com.
Welcome back to the Option Block, everyone's favorite bi-weekly source for all things options related. My name is Mark Longo from theoptionsinsider.com, as well as from a little thing we like to call around here the old Options Insider Radio Network. Actually, I'm not technically around here today. I'm actually down in the southern environs in Florida, so I'm not in the old Options Insider HQ, the Options Insider studios back there in scenic and sunny Chicago, but still, we're getting things done. We're getting shows out to you listeners, so don't worry. Your listening experience won't be impacted. And of course, quite a few programs on the old network, including 450 plus episodes of the Option Block. And where can you find all of that archived options goodness? Well, a number of different places, including my personal favorite, the mothership, the flagship, theoptionsinsider.com. Surf on over there, kick the tires, light the fire, check out the breaking news on the options market, the education, a lot of unusual activity alerts. If you like the odd block, we got quite a few of those up on the site. We've got analysis of different trades. Of course, we have also all of the radio up there on the network, including, if you haven't had a chance to check it out, my conversation with Thomas Petterfee, the founder and CEO of Interactive Brokers, as well as Timber Hill, and a number of different initiatives from throughout the world of options and indeed trading technology. So if you haven't had a chance to check that one out, that was really a pretty interesting conversation. That's on our Trading Tech Talk program. You can find it via that feed or, of course, via our main network feed as well. It's all put into there as well. So surf on over to the mothership. You can find all that, or just surf for it, or I should say search for it in iTunes or Stitcher or Aha Mobile or TuneIn or wherever you find your finer podcast programs. And joining me, not unfortunately from the scenic environs of Florida, but they're pretty happy, I think, with where they are. Starting off with the man beaming in from always scenic, always sunny, St. Charles, Illinois. You know him, you love him, as Uncle Mike Tusaw. Uncle Mike, welcome back to the program, sir.
I don't see why you go to Florida when you can go to St. Charles.
That's true. I could have saved myself a lot of time, a lot of money, a lot of flight. The one thing you guys are missing are the massive theme parks. That's the one thing you guys are missing up there.
Oh, we're close to Santa's Village. What more do you need?
There you go. Disney World, Santa's Village, potato.
That's what I say. You know, we got Riverfest coming up in a couple of weeks, so we'll have the carnival ride. So what's the big deal?
Riverfest. I love it. Nothing more festival oriented than a river. Good stuff, sir. All right, and also joining us from near some rivers, also the ocean, the Rock Lobster himself, Mr. Andrew Giovinazzi. Mr. Rock Lobster, welcome back to the program, sir. How was your vacation?
Let's see. When you have a weekend and you connect 2 days to it, it becomes a vacation.
Did you go somewhere?
Yes,
or did you just play around in your new house?
I went to the Cape. Actually, we had to get out of the new house because we were tired of just having to deal with the whole house.
Tired of the new house already. Not a good sign, sir. You've been there a month?
No, we just, sometimes you need separation. Now that I'm back, I'm fully in appreciation mode again.
It's funny. People who aren't from the East Coast, I think we said it before on the show, don't understand the Cape as like just the destination of vacation destination of choice for pretty much everybody in the entire New England region. You ask somebody where they're going in the summertime or even in the fall or spring, good 80 Delta that it's going to be the Cape. Would you agree, Mr. Rock Lobster?
I can't disagree. I mean, right now to me, it's my favorite time is June. It's a little cooler, and September. I mean, the July and August are beautiful as well, obviously. But I like it when there's about 5. I think the town populations expand from like 3,000 to 25,000 on each of the little towns in the summer.
Yeah, I believe it.
It's crazy.
Ironically, my family is one of the few that never actually partook. We went up there like once or twice, but we weren't the people, and we knew a lot of them who had a regular place up there, and they went up there like every available week. That wasn't us. But that is quite the thing to do. If you ask a lot of people in New England, particularly where I came from, the southern New England region, the Cape was the place. So a little bit farther for you, though, up in Maine, so you're taking a bit of a haul up there.
Yeah, it's 3.5 hours. It's not too. I mean, we know a lot of people on the Cape that are now moving. They're moving to Maine, essentially.
Ah. So you're saying there's a mass exodus away from that other tropical paradise, not St. Charles, but the Cape, away and up to Maine, out to the hinterlands of Maine?
Yes.
Interesting.
I don't know if it's an exodus quite yet, but I mean, even in my little town, I noticed, I had to wait at the stop sign for like 8 cars to go by.
They're like, you know what, this Cape Cod, it's far too scenic, far too enjoyable, far too fun, far too much ocean-going fun to be had. And it's getting too big now. We want to go even more rustic. To the hinterlands we go. That's what you're saying they're doing?
Basically, yes. People are going more to seed, I guess. That's the simple way to think about it. Cape, it's pretty. I have to say, it's hard to find a nicer place in the summertime.
Yes, it is. All of our New England and Northeastern listeners should check it out, even though I'm sure most of you have done so already. All right, and with our regional real estate rundown complete, we're going to dive right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the trading block.
All right, and welcome to the Trading Block. This is indeed, in case you're not familiar, in case you're just joining us for the first time, of course, first off, welcome. Secondly, this is, of course, a portion of the program where we break down what's moving, what's shaking, what's lighting up the old tape in the old markets there today. And, of course, a bit of a down day on the street today. Most of the major indices selling off. The S&P, kind of the Goldilocks porridge of the bunch, only selling off about 0.5 percentage point or so, hovering right around 2081 or so right now. The NASDAQ, I should say, leading the charge to the downside, off nearly a full percentage point. Tech kind of leaning heavily on the market today. The Dow, the laggard, only off about 1/3 of a percentage point today. And as you might expect, that weekend coming in, plus the sell-off, VIX cash getting a hefty boost, nearly a full handle, just a fraction below a full point there, or since Mark isn't here, Andrew, we can say it, 6.8% on the day to hovering right around 1520 or so right now out there in VIX cash land. So Mr. Rock Lobster, a lot cooking in the marketplace today, a lot from a directional perspective, from a vol perspective, from a lot of other ancillary and related stories perspective. What in particular caught your eye today, sir?
Besides the back of my eyelids, sometimes.
Are you saying it wasn't that exciting of a day? Is that what you're trying to say, sir?
Yeah. Besides Tesla, like up $7 because it was up $7. Nothing really moved much. The thing that did move, I think that caught my eye the most was the VIX futures did backwardate for the June cycle for a little bit, and they're pretty close to that at the end of the day because the whole Greece thing throws everything backward again. There's a little bit of instability in Turkey. They're never going to basically. It's the European thing with Greece is very funny. The Europeans can't afford to let Greece renege on their deal because then every other EU country are going to say, hey, listen, why don't you guys just forgive all the loans? So I guess they're just going to keep waiting to the last minute till they have to tell them that, you guys are out of luck. And then they're going to be stuck with a big write-off. But, do they take the $250 billion write-off on Greek debt, or they take the multi-trillion-dollar write-off from all the other countries? So that's kind of, I think, where the ECB finds itself. And ultimately, everybody's just going to have to live on less again. I don't know. But that is what's causing the vol instability, and you can tell kind of how the vol picture is starting to skew now to the terms. kind of just after the end of the month. Apparently, the next deadline is the end of June, where they have to make another size payment, and if not, they're going to officially, they would default. So that's what has made, if anything, that's what's making the market nervous. Because, Tusa said the last couple of weeks, is like overall the U.S. economy kind of keeps pressing along. Oil's a little cheaper, but not too cheap. So there's definitely some growth here, and there's a lot of good signs. So, as far as a volatility creating event, that is still, nobody knows what happens if a country leaves the EU or what it will cause. And apparently the Europeans are, dealing with Greece like some kid, but a kid with no discipline. You guys misbehave and I'm coming up those steps, and after you say that like the 20th time, the kids at the top of the stairs just keep messing around because they know nothing's going to happen. So that's generating, basically, it's making volatility go up, but the market's not moving very much. And that's what we had today. Anytime you have implied vol going up, even with the little weekend effect we had, and the market not moving a whole lot, that's what you're getting. So it's there's more worry about what might happen than actually what's currently happening. That's at least what I'm seeing.
So Greece,
maybe Tusa sees something different.
So Greece is analogous to you, to the kids, the unruly kids up the stairs. That's what you're saying.
Yeah, pretty much. I think that might be the title of the show.
So are you shaking your fist at Greece as we speak right now?
No, I'm actually just looking to buy some more good stocks and sell some puts. They make everybody freak out. So.
Yeah, they do. They do. If you're looking for bargain hunting, bargain shopping out there in the markets, the Greeks are perhaps you're probably a bigger supporter of them, I'd imagine.
I think okay, make everybody freak out, drive the Dow down to 1,800 again, or the S&P 500. Great, I don't care. So I think that would be a scooping opportunity again, like it was in October. So.
There you go.
As long as our trajectory seems to be okay, the market's, it's not totally unreasonable. But when they really oversell it like that on basically nothing, then it looks like an opportunity to me. But maybe I'm just being too much of a diehard bull.
Well, speaking of diehards, speaking of opportunities, we now, of course, turn our gaze across the pond that are the many myriad lakes and oceans between Maine and St. Charles to Uncle Mike. Uncle Mike, you've said many times here on the program you've never met a dip you didn't like in terms of put selling, degenerate put seller that you are. Is today on your radar? Did that maybe make your sleepy eyeballs perk up a little bit more, saying, hey, these Greek folks adding a little bit of premium to the market, giving me a little bit of downside opportunities, time to blast away at some puts? What was your take on today's action?
Yeah, I think the bottom line is what do the numbers actually say? And the numbers say that the S&P is down 0.6%. And to add to what Andrew was saying about the naughty kids up at the top of the stairs, I just have one thing to say to that. Just wait till your father gets home, young man. And then, we'll see what the dad actually does. But anyway, so as we're doing this, I think that with Greece, it's not good what's happening to them by any means, and it's not good what's going on over in Europe. But we have a lot more zeros after our balance sheets in America than they do in Greece. We also have a lot more zeros after our debt than they do in Greece, quite honestly. And I think that this is going to be a little bit of a blip on the radar screen in the grand scheme of things. So I already got into some short puts last week. I believe it was on Thursday. I think I even talked about it on the show a little bit. So at this stage, I'm in the 207, 204 SPY put spread. It's gone against me a little bit from the standpoint of price. But just as I'm looking at, I got a credit of 50 cents on it initially, and it's at 53 cents right now. So it's kind of one of the classic Theta versus Delta battles with which I'm fighting at this stage. But for now, another day of time decay working its way through the portfolio.
The epic, the ongoing Theta versus Delta battle. Yes, always a fun one. I'm sure a lot of our listeners can commiserate with your pain, Uncle Mike. Speaking of commiserating with your pain, you've toned down this holding a little bit, but I mentioned kind of the NASDAQ being weighed down a little bit today. And some of that coming from your favorite, or your former favorite, I should say, fruit company. I saw an interesting stat about this, Uncle Mike, because today is, of course, for those of you out there who follow Apple, their big worldwide developers conference. They announce a lot of new initiatives, a lot of sometimes new products, new iOS versions, et cetera, at these events. And the stock it's usually a buy the rumor, sell the fact kind of thing. So the stock usually takes a bit of a hit. It's off today about, let's see, I think it was down about 0.75 of a percentage point, not even a full handle. So it's not really that's bad of a day. But compared to other times in the past, some people have done some data on this, and they pulled that over the past 10 years, the stock's off an average of 3.7%. During these announcements, Uncle Mike. So these are actually some pretty aggressive. 3.7% when the stock was rampaging in those high levels was a pretty high point sell-off in a name like this. And they say you can't attribute it to the market either, because they pulled out the market movement during that period. It lagged the market by about 4 percentage points during that time as well. So it wasn't like the market was selling off all those times. So yeah, WWDC, not exactly boom times, at least during the event itself for Apple holders. Anything going on out there catching your eye, Uncle Mike? I know you said you've trimmed down that holding, but for your remaining positions, anything going out there in Apple land that today's events impacted?
No, not at all. I mean, with Apple, I think right now it's not a good position to initiate. It's a good position to maybe hold on to if you still want to have a piece of it, just in case. But at this stage, it's once again it's approaching the $1 trillion market cap number, and we've talked about this before. If there's any company that could do it and have them become the first, I think it could be Apple, but I think it's going to be difficult for them to do it unless the iTV or the iCar or something like that really takes off, because I really don't think with the iWatch, I don't know if that's necessarily going to be the new product that's going to do it. I don't think that the new iPhone or any of the new iPad products are really going to ooh and ah people and put them over the top. But on the flip side, it's still a very powerful company. It's still a very profitable company, obviously. And so I think what makes sense for Apple at this stage is I think you just need to view this as you viewed Microsoft 10 years ago. I think that unless they come out with the next wow product, which I don't see happening anytime soon, I think this is just like the modern day Microsoft.
Wow, that's damning with very faint praise from a tech perspective. Because when you say something like the Microsoft, it's stodgy, it's boring. If it repeats what Microsoft did, then it has essentially a lost decade from a stock perspective. Microsoft from 02, 03 until about last year or so really didn't do a heck of a lot. So that's hopefully, I'm sure a lot of Apple holders are hoping you're wrong right now, Uncle Mike.
Well, I mean, as you look at it, though, I do want to add that if one of their new products that they probably have in the workshop, if one of their new products is something that's going to be an ooh and ah type thing, like the iPod was, the iPhone was, the iPad was, if they have the next cool thing, I could see it getting to the $1 trillion number. But until they do, with what they have out there right now, I just don't see it happening.
I can't say I totally disagree with you, and it's interesting to hear you being the token Apple devotee here, the zealot, if you will, on the program, starting to perhaps turn a bit on that one as well. I wonder how that will sit with our listeners who have been firmly in your camp for so long, Uncle Mike.
I'm probably pissed off about 35% of the people who listen to the show.
We just lost thousands of subscribers. Thank you for that, Uncle Mike. But speaking of some other,
they're going to come back in so they can hurl invective at it.
Very true. That's true. Sometimes the hatred actually motivates them more. I think I saw some data coming out of Rush Limbaugh's show a few years ago, and they said people who like him listen for like 20 minutes on average. People who hate him listen for about 3 hours. So maybe we need to piss off all of our audience, and they'll listen with much longer and be much more motivated when they do so to write in and slam us all. Speaking of things that are slamming things, this guy, we talked about this recently, Andrew. I'm sure you've been keeping up with this one because it's just hilarious. We talked about this a few weeks ago. This was the seeming takeover hoax going on out there in Avon Pharmaceuticals, ticker symbol AVP. In fact, you've listened to our Options Oddities show. I did a whole Friday palooza just devoted to the tons of terrible options paper that was going up out there as a result of this hoax. A lot of people lost a ton off this deal because they thought the deal was real. They bought into it. They structured things the wrong way. It was kind of just a loser from the beginning. I'm not sure if you remember, Andrew. I think the trade that opened that day was a 5,000 lot of someone buying some near downside puts. And that's not going to work out in a day when the stock pops about 20%. So, that's your first trade of the day. Things are looking down from there, quite literally in that case. And it just got worse from there. I think a few guys who were savvy sold some far out of the money calls and did all right. But the rest, people just got burned pretty badly. And at the time we talked about it, and we talked about how it seemed like a hoax. And it certainly seemed like one of the more brazen hoax attempts that we've seen in a while in terms of some guy really just sending in a not handwritten, but hand-typed letter to the SEC saying, yeah, I've created this buyout group and we're buying Avon Pharmaceuticals and here's the buyout price. It's some astronomical iteration on what I think it was something like 13 times where the current stock was trading, something ridiculous, which probably should be the first red flag that something is not correct. And a lot of people have since come out and uncovered this guy and done some research into him. It turns out it was indeed one guy. It was Nedko Nedev. He was a Bulgarian living in Sofia. The SEC did just file a complaint against him. And it turns out this is actually not his first rodeo. And you think he would have learned from his earlier incarnation. I think it was our friends over there at Bloomberg writing up how this guy, in fact, was pretty terrible at hoaxes. In his previous attempts, he did it in Rocky Mountain, as well as another name, Tower Group. He tried this same maneuver, one back in May of 2014, and the other one, I believe, back in 2013 or December 2012. Rocky Mountain, he had bought him. And the other thing that was weird is he does it all on the stock, which is probably, it should be our first indicator that this guy, perhaps not playing with the full deck, should be playing with the options. Of course, some of them, like Rocky Mountain, was trading like 2.25 at the time. So you can kind of take the Alex viewpoint on that one and say the stock kind of is an option, so he may get a pass on that one. But I think he started off with Rocky Mountain. He started acquiring a bunch of this stock. It just took a huge hit. He started buying it around $3. It dropped about 2.25, so he was out quite a bit, nearly $1 million at that point. And so he decided to drum up this false takeover rumor. And then the stock popped, like it happened in AVP, until people started getting wind of the fact that, hey, maybe this wasn't a legit offer. And of course, our friend, being the savvy fellow that he was, didn't sell the stock in the after hours. And so he missed the entire pop, because the next morning kind of rumors came out that it wasn't real, and the rally kind of withered. And so he missed whatever opportunity he had to get out of that one. Similar tale in Tower Group. That was another one that was a little bit cheaper, about $3.75. So he likes to stay with the cheaper stocks. So he may have a bit of an out there to say it, but then his second attempt didn't really work that well either, and it didn't really work that well in Tower Group. And we saw what happened with AVP. He did get a near-term bump. We'll have to see. I haven't had a chance to dig through the stock. I'm sure the SEC did, and we'll probably see further details coming out of this. They initially filed just to freeze his assets because they don't want this guy closing out the deal and moving the money offshore and reaping these illicit gains. I'm sure we'll see much more detail coming out of this, but it has been kind of fascinating to watch, Andrew. And it turns out we were right. It was just some guy with his computer essentially saying, yeah, I'm buying out Avon, and here's the crazy price. And didn't work out that well for him this time. Maybe that was him buying the 5,000 lot of puts. Maybe he's just that clueless. What's your take on this guy, Mr. Rock Lobster? Apparently taking his third tilt at the fake buyout windmill and still not really doing that well at it.
It's hard to believe that. All I know is that the whole thing confuses me. Like everybody tries to front run the tape, or they see the tape and they bid stuff up. And it's almost like they invented this guy. It's too good for. It's like he was invented out of the news.
It is a pretty good story.
The Bulgarian national, drums up some stories, and he's trying to paint the tape so he can unwind his holdings. Who's that hedge fund guy that always does the same thing? HLF is going to zero. Here is my dissertation on why it's going to zero.
I think that's every hedge fund manager ever.
So, an icon, Apple's going to 200, and I already own like $1 billion of the stock. I guess it's how big you are when you do it.
Exactly. Icon can get away with it because he owns all of it. This guy only owned a little bit, so he's going to jail.
That's kind of how it is. Like if you rob a little bank, it's your problem. If you rob a big bank, then it's not your problem anymore. So I think I love it just because it makes such good copy.
Yeah, that's pretty much the best way to describe the story. It is good copy. It does kind of ring like it came out of some kind of bad Hollywood scriptwriters, hack scriptwriters MacBook there, where he just cranked out. Of course, you probably wouldn't believe it that it would be something so low tech and so low rent could actually work in terms of not so much working out for him, but work and having an impact on the market. He did drive AVP. I think it was end up being about 13 to 15% or something along those lines. So he did get a pop. He didn't profit from any of it because his shares got frozen, but still interesting stuff here in the world of how easy it is to scam the SEC and apparently the market. And speaking of scams and unusual activity, that's the time of the show when we like to dive into that stuff, and we call it the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody, and welcome to the Odd Block. This is indeed the portion of the program where we break down what's moving, what's shaking from a weird activity perspective. If you like what we talk about here, you can check out a lot more of it on the network and indeed on the website. Probably the best place to start is, of course, surfing on over to the flagship, theoptionsinsider.com. Got a whole unusual activity section there for you guys to enjoy. And if you like this segment, check out our Options Oddities program, also available on the network. And if you're a TD client, surf on in live. You can listen to it live every day, noon Central, 1 p.m. Eastern Time. A whole show devoted to all this goodness. And we're going to kick things off with the iShares MSCI Turkey Index ETF, ticker symbol TUR, T-U-R. This is the name that closed today. Not a good day for them, down about 3 handles or over 6% to $43.35. This is the name that does, on a good day, 600 contracts. So not exactly a world beater from a volume perspective. Today, doing about 5,600, so a pretty decent pop out here in good old TUR. And what caught our eye, not perhaps too surprising given what we saw today in the underlying, was a lot of love for the puts. It was about 14-1 puts over calls out here in MSCI, and in particular the lion's share of that come in one sizable downside spread here in June. The June 41.38 put spread going up quite a few times, starting off pretty much 1-1, going up 1,000, buying the 41s, selling the 38s, going up 1,000 times, like I said, paper buying for about 58. Selling the 58, 59 puts. Went up in quite a few blocks, a lot of them over there on the ISC. As the day went on, it seems like they started legging into a bit of a ratio, 1,800 of the 41 puts going up and 2,700 of the 38 puts. So going a little bit heavier on the 38 strike versus the 41 strike, legging into a little bit more longs on the downside there. So in case the worst comes to pass, they got a few more long positions in their back pocket. Mr. Rock Lobster, what's your take here on our friend? Starting off 1-1, then getting into some funky ratios, not really 2-3, but close to it here on this downside put spread here in TUR.
This made me go look at what was going on in Turkey, because Turkey close to Greece. There's some hangover from that situation not getting resolved. The second thing was Erdogan, if I'm pronouncing his name right, he was basically, trying to lock up the country to some degree, and he didn't get it. His coalition, he was trying to create some, anyway. So there was a lot of political issues, or there's a big political issue there, and so the stock went smack down, and it's trading at, I believe it's like lows, these are lows, 1-year lows at least right now, maybe even a 2-year low. So yeah, and I just think somebody's being, they're taking the political strife, even though nothing really, quote unquote, is economically wrong. Remember when Turkey, I think it was it was last spring, where there was some issues with, the Russians and then the Turks, and there's that mini emerging markets crisis in early 2014 that sort of went nowhere.
Yes.
I guess that was the last time the stock was this low, and right now it's just a political crisis. There's no, besides the generic Mideast unrest. So anyway, I think it puts sellers coming in. They're trying to hedge a little bit by buying a few more 38 puts, but they are doing a little. It just feels like a little scooping, much like if we have any of this Greece crisis causes a little bit more of a sell-off. You might have that the opportunity to dump some downside puts, or this customer did it with put spreads, it looks like.
Yeah,
So,
not a bad way to structure it. You're right. It is hovering around some lows. I think it was trading a little bit lower back in March of last year, around 41, but it's getting pretty close to those 2-year low levels. So our friends here are saying, yeah, not a bad place to perhaps write some downside plan for a bit of a pop. But in case the worst comes to pass, in case it keeps rolling, they got a few extra in your back pocket. So not bad on the savvy scale, would you say, Mr. Rock Lobster?
no, I don't think too bad. And the time frame is, again, right around this Greece time frame, as in either Greece does what they're supposed to do or they don't, and then everybody freaks out, which is why you buy the extra puts, so which would help them quite a bit. The thing, if TUR is trading 34, which I don't think it's going to happen, but as we have seen, anything can happen.
Yeah, they would have a few smiles on their faces if that was indeed the case. So yeah, not bad. Typically a little more savvy than typical buy 10,000 upside calls that we see going up here time and again in this segment. Moving on to another name. This is, I believe, a newcomer to the odd block. This is Anglo Gold Ashanti Limited. This is an ADR, in case the name didn't give it away. Ticker symbol AU. I like that one. Closing today $8.72. Excuse me. Pretty much unched on the day. Is a name that does about 1,300 contracts a day, doing a little over 2x that today, doing about 3,000 total contracts today. And the bulk of that paper was coming in the longer term stuff. In particular, let me scroll down to it. There we go. It was the Jan 2016 10 puts going up fairly sizable amount. We started off profiling just 419 and going up paper selling for $2.15. By the way, Andrew, I had someone ask me on one of the other shows recently, what is it? I keep saying paper. What does that mean? And maybe we should clarify that here on this show as well. That is, of course, what the customers are up to. Sometimes we've been doing these shows for so long, we've been so deeply entrenched that some of our listeners may be saying, hey, what are they, particularly some of the newer listeners, what are they talking about? Well, that's, of course, what the customers are up to, what the paper flow is actually doing out there in the product. In particular today, it was selling puts in AU, like we said, starting off 419, getting blasted out for $2.15. As the day went on, about 5x that total, going up here on the strike for a total of 2,288 total for prices in about that range. These puts went out $2 at $2.10, so they probably got the lion's share right around that $2.15 range. The initial kind went up on the Philly. The latter ones actually swept a bunch of floors. As you might imagine, this is not exactly the most liquid name on the planet. They were hitting bids wherever they could find them. Looking at the open interest, this is one of the few strikes pretty much anywhere with any sizable open interest. The Jan 2016 10 puts having about 6,500 contracts open. The only other ones that really rival it, or actually exceed it in this case, is the Jan 2016 12 strike with about 8,700 on the calls and 16,000 on the puts. So there is some put activity out here in good old AU when it comes to Jan 2016. In this case, looks like our friend here may indeed be closing out, in which case he probably has about 4,000 or so more contracts to do. Mr. Rock Lobster, where do you fall on this one? You think this is closing? I think our friend is just piling in to this strike with a little bit more volume here in good old AU.
I want to say this is a closing trade, mostly because it's right at the bottom. And, if you have this put as protection for, let's say your long stock and long put, you probably want to take some profits down here. I mean, gold is sort of setting, it's kind of near some near-term lows. Tucson, of course, we know more about it, but it's feeling about that level. So it feels like it could be a closing position, or somebody wants to buy even more at around $8, which I think is the all-time low for this one. So I think this type of play actually is not a bad. This is not a bad way to get long. You know, you go out to January 2016, you're selling a put for $2. $2 on risk would be 25% return, basically, all in risk to zero for AU. So, and if nothing really happens, you're still going to make some money on the trade and get, a decent return. So I don't think these are bad plays with gold where it is right now. I have to be honest with you. They don't look awful to me.
All right. Yeah, I agree, Mr. Rock Lobster. That's certainly, at least the first two, we've seen a little bit savvier than our usual fellows who are just buying upside calls. But have no fear, listeners, if that's what you're tuning in for, some upside call love, we've got you covered. In particular, it's with our old friend Carnival Cruise Line. They've kind of had some action over the past year or so. Started with that cruise ship disaster. We saw a lot of unusual activity out there surrounding that event. And they seem to be popping up every now and then since that event, with some frequency, some regularity, maybe once a quarter or ever so. So certainly more than they did. Popping up again today. This is the name that does about 2,500 contracts a day. So not bad volume compared to a lot of the names you talk about here. Doing a little over 9,000 today. So nearly 4x here on the day. And what caught our eye in particular, surprise, upside call love. Yes, listeners, we couldn't let you go away without somebody buying some calls somewhere. And in particular, it was in Carnival today to the tune of the July 48s, catching somebody's eye and catching it for size. When we started out the day, we profiled about 2,500 of these going up paper buying for $1.25 as the day went on, about 3x that, nearly 7,500 total going up on the strike for a variety of different prices. They went out $1.15 at $1.25, so you probably got the rest, the latter kind, for more favorable levels than $1.25. 2,385 open on the strike, so clearly this is opening paper. Should mention there is earnings on the June 23rd, so this will include some earnings, and he couldn't have gotten that done with June, obviously, so this could indeed be a straight-up earnings play. These aren't that far out of the money, only about $1 to go out of the money right now. In fact, where the day started today at 47 1/4, they were only 75 cents out of the money. So these aren't that unrealistic compared to some of the other upside call buys we've seen. Our friend here clearly perhaps specking on some post-earnings upside love here in Carnival. Mr. Rock Lobster, is that your take as well? I think this is a straight-up earnings spec, or is there more perhaps lurking behind the scenes?
I don't know what's behind the scenes, and as we say in the Options Oddity show, just because the paper looks like they're doing one thing, you never know what they're actually doing, because they could be positioning stock or something else. But you look at a buy like this, you see all kinds of volume. It could be, smells kind of like maybe a newsletter buy. They keep buying them out, buying them. Smells very much like a newsletter upside call buy. Wouldn't be surprised if one of those, you searched around the web and all of a sudden, somebody put a buyout on Carnival Cruise Lines. All's cheap and and it's going to go rip into all-time highs.
If that's the case, this is one of those rare opportunities where the newsletter guy who tried to front run his clients seems like he got the worst fill. he front ran himself.
So, this is just one of those where Carnival is sitting at near at least 2-year highs. So, and I think somebody's just trying to, it's a classic play where the best time to buy calls if you think something's going up is between now and the earnings cycle, because there's at least a floor under volatility for the next couple of weeks. So I think that's what they're doing. So and that's kind of where the trade sits. Whether they position stock against it, it's kind of a strange, it's so many blocks, it's pretty hard to believe that they'd be positioning stocks against this, you know what I mean?
Yeah, it's an odd way to execute it if that's the case.
It would, and a lot of the thing too, when we do the oddity show is, if you're a fund, how are you positioning against this? If you're short 700,000 shares of stock, are you buying calls like this? Probably not. It doesn't make a whole lot of sense, but good. But it feels unlikely. So it feels just kind of like newsletter upside call buying. Let me have it. Let's see what happens.
I'm going to go with the newsletter scenario. I'm going to go with option B there, just because I like the mental picture of the guy trying to front run his lemmings and getting the worst fill of the day. That puts a smile on my face. So I'm going to go with that one.
That could be the title of the show. Newsletter guy stubs his own toe.
Newsletter guy front runs himself. Well done. All right. Good stuff. Listeners, if you like that stuff, check out the Options Oddities program. And, of course, surf on over to theoptionsinsider.com to hear and read more. And now, because it's Monday, it's time for that part of the show where we dive into what good old George Bush would have lovingly referred to as strategery. Yes, it's time for the strategy block.
It's time to dispense options, wit, wisdom, and education. It's time for the Strategy Block.
All right, everybody, welcome to the Strategy Block. This is indeed the portion of the program where Uncle Mike tears himself away from the lovely poolside weather they have 24/7, 365 out there in scenic and lovely St. Charles, and proceeds to sit down by his computer to dispense some options, wit, and or wisdom. Uncle Mike, a lot of different things on the table today. Maybe put writing, maybe some Apple upside love, maybe all kinds of fun stuff. What do you have in store for us for the strategery block today, sir?
Oh, you're going to love this one. Ratio spreads on bonds.
I didn't know Alex was back on the program, sir. Let me I'll have to change the show notes accordingly.
Very good, very good. All right. With a smaller section of client portfolios, I have a bearish stance on bonds, and I've had the stance all year. And so it's kind of one to where I've gotten chopped a little bit, but on this show, we are honest traders. As for any of you who listen to this show, whenever Mark Longo brings up Cisco, he always makes it a point to rub my face in the dirt, which rightfully so. We need to do such things to keep each other honest on this show. And so on this trade so far this year, I'm down I have the equivalent of the entire position in an underlying holding in TLT. And so let's say it's 100 shares. So I have probably about $12,500 allocated towards this bearish trade so far this year. And with that, it's down about $100 per 100 shares. So it's one where we've been able to capitalize recently on the down market, but we did get burned a little bit when TLT went up a few months back. So with that being said, and I think actually the end of January is when we got into this. I want to go over how I've been doing this in terms of how you can be bearish on something, but still have it to where you manage risk, and so that you can use options in a way with which at least I like to use anyway. I'm not typically a ratio spread kind of a guy, but this is one area with which I felt it made sense, and I'll explain why momentarily. All right. So as we go through this trade, I've typically been buying at the money premium, at the money puts on TLT. And then what I've been waiting for is if we get a little bit of a move downward in the marketplace, at that stage, I will do one of two things. I will either roll down the puts, meaning let's say I bought an at the money put and we get maybe a $2 to $4 movement in TLT over the course of a week to the downside. I will roll the puts down to take profit. And I will sell the at the monies that now became in the monies and buy more at the monies as a way of taking profit but still having bearish exposure. Or I will sell 2 out of the money puts, meaning for every one that I own, I will sell 2. Now, because of the fact that I have a larger amount of money allocated towards this trade, it is a cash secured put. It's basically a diagonal put spread, a 1-by-1 diagonal put spread, and a cash secured put. And so the way with which I've been doing it, I've been going right now I'm in the August 118 put, and I've been doing 1 to 2 week near term puts with the ratios. And so the rules with which I have with this are very similar in terms of what I've been doing on SPY that I talk about on the show all the time. Should the market stay the same or go up, I don't like to sell premium on it because of the fact that if it goes back down, that's your biggest risk and how you're going to get blown out doing such a thing. Over the course of the last month, this has had a really nice swing to the upside. But nonetheless, we had to swing to the downside earlier on in the trade. So the reason for the swing to the upside in the trade is that we've been continually managing risk, rolling the puts down, and then strategically selling out of the money short puts in a 2-for-1 ratio. Now, what determines which one we do? Well, what I like to do with this trade, as with any trade I do, is I go shopping. I look at all the options, see where the volatilities are in the individual options, see where it might make sense if the volatility is higher in the near term out of the money puts, then, well, we'll sell some of those. If it's not there, then we can roll the put down and take advantage of lower premium because of the fact that vol's not there. And at times, I've actually done a roll down and a simultaneous 2-for-1 put sale at the same time. So the point of this in terms of what you can do with it is that if you're bearish on something, I don't feel comfortable just straight up shorting TLT, quite honestly, or IEF or well, SHY, I guess wouldn't be a huge deal. But either way, I don't feel comfortable shorting those instruments. And so my opinion is that by just buying long puts, you have a way with which to participate to the downside. Now, the other thing that I have done, I haven't done it yet this year, but I have done on this, is just sell one out of the money put and just treat it as a diagonal spread, similar to what I've done with SPY for many years. I've done it, but at this stage, I feel that in a lot of the instances over the course of this past year, 2015, there's been more opportunity to sell two further out of the money puts and just kind of hold on, so to speak. Once again, we have to have a movement to the downside before I either make a roll or sell some more puts to take on more risk, because then I'm counting on the fact that the market will correct itself somewhat. But the point is that this is a way with which you can be bearish on something, whether it's TLT, whether it's with stock, whether it's with a REIT, whatever the case may be, it's a way with which to do it. But the key is that keeps this trade sane is that I'm using this with an allocation of how much it would be to own the stock anyway. So with that being said, that is the strategery that's going on today in the RCM folder.
Well done, sir. Some good strategery as always. Listeners, if you want to learn more about what Mike's cooking up, then of course check him out over there at RCM Wealth Advisors. He'll give you all his contact info at the end of the show, as he is wont to do. Meanwhile, though, we have one more segment before we wrap up. Yes, it's time for Around the Block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody, welcome to the Around the Block segment. This is indeed the portion of the program where we peer ahead, let you know what we're keeping an eye on for the rest of this trading week here. Last week, we, of course, had non-farms at the end of the week. Everyone was kind of paying attention to those, seeing how they would perhaps impact the market. We had that sell-off going on Thursday that kind of obscured the net impact of non-farms, but it still seems if you try to pull some of that premium out from the sell-off, there still was a little bit of hesitancy, a little bit of reluctance built into the market, a little bit of premium, if you will, coming out of that non-farms event. We don't really have that this week, but that said, Mr. Rock Lobster, perhaps we'll start with you. What is really catching your eye, aside from waving your angry fist at those kids up the stairs known as the Greeks?
Every client is like, wait a minute, we're not all like that. And we know, I have to say, because I know my clients are not happy with what's going on there. They're just when you have too many academics trying to run the country at once. I think. Anyway, what are we looking at? I don't think we're going to see a whole lot happen in the month of June. You know, we don't have a lot of earnings. We don't have a lot of numbers coming out. And we're just going to watch this, Greek tragedy drama unfold. Good, bad, and we're going to, there'll be the sound bite today and the sound bite tomorrow. We're down 0.5%, up 1%, down. I think it's a good time to sell upside premium. out of the money, basically. So I don't see a whole lot happening out of this, and there's not a lot of numbers to drive anything. That's basically my view really on it. I see kind of a flat market, and just selling stuff out of the money is probably really the only thing worth doing right now.
I don't want to front run vol views too much here at the end of the week, but what about this little blip we're getting from a vol perspective today? You think this is a one-off aberration to sell? You think we'll be hovering around these levels for the rest of the week?
I think vol is going to slowly tick up as long as the Greece thing is going. Is still making its way. So I see it kind of ticking up, like slowly but surely, and then at some point the vol won't go away. But right now, I would be very surprised to see vol VIX trade below 14 between now and the end of the month, as long as this issue is still kind of percolating.
Got that Greek love on the horizon. Speaking of things on the horizon, I didn't mention at the top of the show, we do have one name still that I know a lot of you like to trade out there. I know it was a big favorite of a lot of our OX listeners, and that was, of course, LULU. They are reporting tomorrow before the open, June 9th. So hopefully, if you guys listen to this, you got all your position in and done already. They closed today 61.5, off 2.25. So not a lot of love out there on the street for LULU. Perhaps some of that earnings info having perhaps leaked out already, rather that or the stock taking a big hit before the earnings. A lot of paper going up out there today, too. This is the name that does about 10,000 contracts a day, doing nearly 70,000 today. So a lot of earnings-related paper. LULU still one of the big drivers out there, I know, for a lot of the retail masses. So we'd be remiss if we didn't acknowledge that one as well. We'll keep an eye on how that one performs. But aside from that, not a heck of a lot of large names left here on the old earnings calendar, but there's always things to keep an eye on. Uncle Mike, Mr. Rock Lobster, talked about Greece. Is that your main point of view too, as well as all of your newfound love for the macro world?
Oh, I love everything. You know me. Yeah, I think Greece is something that we need to look at, but I think it's just the numbers. I want to see if the bonds do continue to go lower. I think we're at a key point to where we could break out to lower levels. We've pulled back in stocks right now, just in looking at the S&P. As we've pulled back, we're at levels to where we have not been since, give me 1 second here to pull this up. We're at levels now to where we have not seen since early May. So I think it's just about looking at the numbers at this stage more so than anything, because like Andrew said, there's really not too much going on except for the Hawks in Tampa Bay being tied 1-1.
Yes, the big news in Chicagoland, but I'm not in Chicagoland, so that isn't big news down where I am. But yeah, looking at some fun stuff. Someone lighting up a bunch of June 75 calls out here in LULU. So perhaps a bit optimistic fellow out there in LULU. We got a few of those floating around out here, I'd imagine, in our listening audience. But unfortunately, that's all the time we have for the Around the Block segments. Also all the time we have for this episode of the Option Block. But before we go, as always, let me check in with each of my cohorts, my partners in crime here on the old All-Star panel, see what they have cooking that may interest you, maybe give you something to do in this period where we're starting to creep into the summer doldrums and the market perhaps not lighting it up as much as you might hope, looking for something else to do, keep your interest, perhaps build your skills in the trading arena. Maybe we could help you with that. Starting off with you, Mr. Rock Lobster, what's cooking in the land of the pit?
Well, the biggest thing we have is our boot camp, and just for the cost of a buck on a couple of one lots, you can actually learn something. So it's 8 hours of learning, starts tomorrow. It's around 2 hours per day from about 6 to 8 Eastern time at night, and then on Saturday morning, 8:30 Central. And that is our biggest cooker. There's a couple spots left, and there's some quizzes and information, basically how to, and Mike talks about this a lot, when you want to learn how to position a trade, and you need to understand how the position's going to work. So that's why you want to try to create positions that are going to move in the direction you think something might happen. So one of the first things is you might need an idea. But if you don't know how to set up and understand and manage an option position, then you're going to have a harder time making anything happen. So that is what the boot camp is all about. It's a hugely condensed amount of learning, and it's been one of our more popular sellers, and a lot of people come and stay at Option Pit after they take it. So definitely worth checking out.
There you go, listeners. Tune in, check it out, and perhaps Andrew will wear a fancy drill instructor's hat and have a nice whistle, and you'll get a good laugh out of that. That alone is probably worth the price of admission. Wouldn't you say so, sir?
I think at least. I'll borrow one of Alex's fancy hats.
There you go. All right. And last but certainly not least, Mr. Uncle Mike, what is cooking in the land of RCM Wealth Advisors?
We are calling all self-directed traders. We have a lot of traders with whom they trade on their own, but they like to have a little bit of advice on a trade from time to time. At RCM, we're able to make this cost effective just because of the fact that we get very good commission rates through both TD Ameritrade as well as Interactive Brokers. And if that's something with which you're interested in, a lot of people just come by just to even save on commission rates and don't even want the advice. But nonetheless, if you're a self-directed trader and you like either of those two platforms, give me a call or send me an email. Would love to tell you about what we do and how we may be able to help you. My number is 312-212-3531, or send me an email at m2saw@rcmfs.com.
There you go, listeners. Give him a call if you want to learn about what he's got going on. Or maybe, like you said, just take advantage of those low rates he can offer you. If you don't even want to hear from him, you don't have to. Just take advantage of those low rates. I think you'll find those valuable in and of themselves. And on behalf of Uncle Mike and the Rock Lobster, and indeed myself, I want to thank all of you out there in the listening audience for downloading and streaming and subscribing to the show. And we'll see you next time right here on the Option Block.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.